Good morning, good afternoon, good day, whenever this finds you, good evening. Anyway, my name is Brett Martin with Mom and Pop Business Funding, and I want to take a moment and introduce Darius Ellis. He is our National Sales Manager's manager, and he's the president of that division. And recently, him and I have been talking quite a bit about doing a podcast, and he thought up a great idea, and that was, why don't we bring together frequently asked questions? And so that's what we're going to focus on this morning. I guess it's not morning, it's at mid-afternoon for him and I on the West Coast. But anyway, that's what we're going to focus on today, is frequently asked questions. Without further ado, I'll go ahead and hand it over to Darius. There you go,
All
brother.
right. All right. Thanks for the wonderful introduction, Brett. Good to see you.
Yeah, you betcha. I love that smiling set of teeth, brother. I wish that cancer ruined mine. They turned all brown. I gotta get me some, I don't know what, maybe some dentures or something. But anyway, I miss my white teeth. But it's good to see your smile, man.
Thank you.
Sure.
I'm trying to hang on to them as much as I can, as long as
Yeah.
life
Amen, brother. Yeah, I'm jealous too. I can't grow any beard on this side, and I'm jealous of your stubble for sure. Yeah, it looks good on you.
Thanks, sir.
Yeah.
All right. So we'll kick it off with these series of questions that we've collaborated on, and starting out with number one: is a merch cash advance a loan?
You know, there are certain states that call merchant cash advances loans, but for all intents and purposes, they're not loans. And a typical loan will accrue interest in the event, like as an example, you didn't make a payment
Right.
and pay that principal and interest down. But these loans do not accrue interest. It's a fixed cost to the money, and for all intents and purposes, they're not loans, but they sure act and feel like a loan. But on the legal document, no, they're not loans.
Okay. And how much can a business receive through a merchant cash advance?
So, there's liars in this industry that will tell you what you want to hear in regards to how much money a business owner will qualify for. But the bottom line is they qualify for 1 to 2 times their gross monthly revenue. So as an example, if their gross monthly deposits are $100,000, which would be cash, checks, wire transfers, credit card transactions, ATM transactions, food stamp transactions, all that combined, if the bank statement said, you've got $110,000 that came in last month in January, those people would qualify for up to $220,000. So up to 2 times their gross monthly revenue, typically averaged back for the last 6 months. Okay.
So if they did have, a month that was at like 90,000 and one that was at like 120,000, we just kind of go through the entire 6-month average. Is that correct?
Yeah, if 4 of those months hold that figure of, that I was using of $110,000, we'd probably lean that way and go up to 2 times that, which would be $220,000, even though they had 2 months where they didn't bring in $110,000. But once you get to that 3rd month or that 4th month where you've got that inconsistency, then we have a tendency to drop down and typically go to 1 times their gross monthly revenue in loan amount, maybe 1.25, 1.5 times their gross monthly revenue. Other factors come into play. Other factors come into play, like how long they've been in business, whether they have a website, whether they're home based. Um, you know, these types of things. How many years they've been in business? I think I may have mentioned that, maybe not, but anyway. So yeah.
And how is a merchant cash advance repaid?
So it's interesting. We're so used to paying, you know, the tanning booth club or the gym, dues once a month. We're so used to making a car payment once a month. We're so used to paying our car insurance once a month, or a house payment, or pay rent, or pay a mortgage once a month. But in this industry, you're typically paying daily, 5 days a week, not holidays, not weekends, or the business owner is paying these loans back once a week, or they could be paying back twice a month, or in some cases, once a month. And what it depends on is how frequent their cash flow is. So, as an example, a gas station and a convenience store combined, they get money in every day, all day. So we would probably get paid back daily from them as opposed to monthly, where a property management group who owns apartment complexes, they get their money in from the 1st through the 5th, and so their income is very strong at the front part of the month, but not the rest of the month. In that case, that company is going to be paying back monthly. So
that makes sense. And you kind of answered the question with the previous one. Do merchant cash providers charge interest? So can you kind of expand upon that, which also ties into another question, is how does factor rate work?
So it's a flat cost of money, which is really easy to comprehend. Imagine we lend you $100,000, Mr. or Mrs. Business Owner, $100,000, and in return you owe us $30,000 in addition to the $100,000. So that would be a 1.3 factor rate, the 0.3 being the $30,000. So a 1.4 factor rate if we loaned you $100,000. A 1.4 factor rate would be you owe us $140,000. Okay, so a 1.25 factor rate against $100,000 loaned or advanced to a company would mean they owe us $125,000 in return. Okay, now you work off of that $125,000 that you owe, or $130,000 that you owe, or $140,000 that you owe, for the combined loan amount or advance amount we gave you, plus the cost of money. Now, this is the interesting thing about it, Darius, is that so many people get caught up in, oh, geez, the interest rates suck, or, oh, I'm not going to be able to sell high interest rates. Well, you have to understand, think about this for a moment. We lend them or advance them $100,000, and it's fixed at 30%, okay? So they owe $130,000 in return. If they don't make a payment today, let's say Monday, today's Sunday, let's say Monday, Tuesday, Wednesday, or Thursday, if they're paying back daily, if they don't make a payment, in a normal lending environment, there would be a late payment fee, and interest would accrue. But that doesn't happen with us. What happens with us is we just tag that on to the end of the loan, and now they have one more day on the length of the loan period. So let's say they didn't make a payment for 5 days. We just tap that on to the end of the loan period, and they have a 5 day longer term loan. So these loans really never have an exact beginning, middle, and an end. Because, you could have somebody who gets injured as the owner, and it's a one woman or a one man shop, as an electrician, as an example, or a roofer. They fall off a roof, they're in the hospital for 2 weeks, they come back to work, and now 2 weeks of payments haven't been made. Again, interest is not accrued during that time. We just put that 2 weeks worth of payments on the end of the loan, and now when they start making payments again, there's no late fees and interest is not accrued. So hopefully that answers your question.
Yes, it does. Thank you. And it
And
really,
then some, right? And then some.
it actually does. It does address another question that we came up with is what are some of the general terms on the loans as far as the length of repayment? So
So
like a 6 to 12 or 6 to 84 months, like.
yeah, we've got loan products that go up to, they're loan products. They're not merchant cash advances that go up to 84 months. But we're primarily, I'd say 90% merchant cash advances. And you're looking at 36, 48 month or under typically. Um, Now, why does somebody get a shorter period than someone else? Why does someone get a 1 year repayment period or term to the loan, length to the loan, versus someone only getting 180 days, 6 months? It always has to do with things like how long they've been in business, how consistent is that cash flow we talked about earlier? Is each month different from the month prior? Are there a lot of non-sufficient fund days? Are there a lot of insufficient fund days? Days where there's no money in the account. Is there a lot of overdraft days where they bounce checks? Do they have a negative daily balance at the end of each day? Imagine being in your own checking account, Darius, and you look in your checking account at the end of the day, you're negative, $60. You're going to pay the bank a fee for that. And so those things come into play for us when we're grading the file, when we're underwriting the file. If we see that, then we have a propensity to, lower the amount of money that we're going to be lending and increase the cost of the money, just because they're probably going to be a higher risk company on whether or not we're going to get paid back or not. And if so, on time.
And that makes sense because we had another question that ties right into that. What happens when the business's volume goes up or down when it comes to their payment?
So, from an underwriting standpoint, that would create an environment where they would just get less money and crappier, or shorter terms. If someone has a business that we lend to or advance money to, and they start to have problems with their company and sales start to go down, we will oftentimes, with those companies, so long as they're reaching out to us, what we'll do with those companies is adjust that payment and adjust those terms on the loan or the advance, and make it longer, and make the daily, the weekly, the twice a month, or the monthly payment less, because we don't want to hurt them. So
It becomes sort of
hopefully
like an
that answers your
elastic
question.
payment model.
Yeah, absolutely. It's a good term for it.
And can businesses take on multiple merchant cash?
Yeah, it sucks, quite honestly. When I got in the industry in 2007, nobody had what you would call like a second mortgage or a third mortgage. You got one merchant cash advance and that was it. And then along came not companies that said, "Hey, we're going to get into this industry and do seconds or thirds or fourths and go call everybody that has a first." But believe it or not, the way it really happened, Darius, is greed. That loan officer, that ISO, independent sales organization, that person, that salesperson, you know, they couldn't find a loan that week, maybe that month, or an opportunity or an advance. And so what they did was they went out and found an investor, a friend, a family member, or some other company, and they would talk them into taking the current loans that they've done for people and go back through and give someone like you a call. "Hey, Darius, you did a loan with me 2.5 months ago, or an advance with me 2.5 months ago. How'd you like to have an additional one?" And so they stack that second one on top of the first one. Now the problem starts to become, can you afford it? And more often than not, these companies don't care if you can afford it at all. They just want their commissions, quite frankly. And so, as an example, if you got $100,000 on your first advance, you're not going to get that much on your second advance. You're going to get less. It's going to be 75,000, 50,000, something like that. Then if there was a third, you're going to get less than that. You're going to get 20, 30,000, 15,000 or less. And if there was a fourth, so with each loan stacked on top of another loan, or advance stacked on top of another advance, the loan amount or the advance amount goes down.
Okay.
And interestingly enough, creates, quite frankly, more problems for the business owner. So we're known in the industry, Mom and Pop Business Funding is, for taking all of those and combining them and then giving them one loan or one advance and longer terms and lower cost of money. And then that business owner's not in a situation where they're having money pulled out daily by, 3 or 4 separate withdrawals, 2, 3, 4 separate withdrawals, or weekly or twice a month or monthly.
So in essence, you would consolidate all those positions into one and make it easier
Yeah.
for the business.
Yeah. And then we always add more money because they're always in need for more money. And then we always make the terms longer so that those payments go down. So if you were to combine, let's say, 3 advances stacked on top of one another, a first, a second, and a third, and you combine the payments, our singular loan or advance in this case would be less than these 3 combined. So their daily payment is less, or their weekly or twice a month or monthly payment is less, typically.
That'd be very beneficial.
Yeah, it is. I mean, quite frankly, I don't understand why more people in the industry don't go out and sell with that mindset of, "Hey, I'm here to help you, consolidate everything." I mean, it's kind of like having a personal budget. Imagine having, 3, 4, 5 credit cards and combining them all and having one credit card.
Makes it a lot easier for the business.
Yeah, no doubt about it.
Are there restrictions on merchant cash advance fund use?
Can you say that again so everyone can hear that again? This is important.
Yes. Are there restrictions on merchant cash advance funds usage?
So on our flyer, you can clearly see on all our flyers that it says that the business owner can do anything they want with the money. I mean, you've got to ask yourself at some point, whether you pour yourself a beer or a whiskey. Everyone seems to be in distillery type liquor nowadays, or water for that matter, and just sit there and say to yourself, what is Mom and Pop Business Funding's flyer all about? There's actually a section that talks about the uses of the money. And the reason we did that was because what I came to realize at a very young stage in this industry in 2007 was that business owners kept asking me, can I do anything I want with this money? And finally one day I said to the business owner, why are you asking me this? Would you mind? And the lady made the comment. She says, well, because I'd like to use this money for my daughter's college education for her first term, and the bank won't let me take a business loan out to pay for my daughter's education. And it was like, oh my God, what a market. And that's when I really thought about saying, okay, I got to go start marketing banks for the bank loan turndowns.
Right.
Because there are those people that want to use this money for uses outside. I mean, let's be honest with one another. You own a business. You should be able to spend that money that you have left at the end of the month on anything you want.
Right.
And interestingly enough, banks won't allow that. In fact, more often than not, what banks will do, especially nowadays, is let's say they are going to lend you $100,000. They'll actually take $75,000, $80,000 of that money and hold it back almost like in an escrow account. And, if you're, putting in some improvements in your building, as an example, until you reach that point where you've got those improvements to a certain point, they're not going to release the next draw. And with us, that's not the case. We release all the money at one time. Unless, of course, they want it split up over, 4 equal payments quarterly, or 2 or 3 or 4 equal, 5, 6 equal payments over the course of 6 months or 5 months or 4 months or whatever. We can accommodate them in that manner.
Keeps it really flexible for the business owner, so that way they can just kind of adjust with their
business. Yeah, and the sad part about it, Darius, is that most salespeople in this industry that I've competed with over the years, and that our company's competed with, they just don't get involved in not so much asking questions as it is just having a conversation. You with me?
Yeah.
Instead, it's just, here's what I do. Do you want to do it? And it's like, be like me saying to you, hey, brother, you're a handsome guy. How'd you like to sleep with me? And it's like, it's really sad because that requires just one of two answers, and that is yes or no. And I refuse to be, in a Tony Robbins or a, Jordan Belfort, the Wolf of Wall Street type mentality, where I'm asking people, do you want to do this, yes or no? What it does, it's what I would call a buzzkill, is it immediately stops everything, and now a decision has to be made, and it's over. It's over. I mean, that's it. I was working with an ISO on Friday, and the lady was adamant with Bruce that she wasn't going forward. And I said, look, man, this is $480,000 that she can have today. It's only 11 o'clock. And she got on the phone and with me and with Bruce, and she started in, and she was like, no, I'm not interested. I'm like, well, hold on a minute. Why did you fill out the application? Well, I needed a loan. I said, okay. Did you need a loan or did you want a loan? I mean, is the world going to end if you don't get this loan? And she said, I'm going to be in trouble. if I don't get this loan. And I said, what are you going to be doing with this loan? She said, believe it or not, it's going to be used for payroll. And I said, so do you have other options? Have you got other options available? And she goes, well, I've tried the bank and I wasn't able to get it done. And then I went to another bank that I don't bank with, and they weren't even interested in talking to me. And she said, I'm going to look around. I said, just listen to me. Stop for a second and understand. That old saying exists, a bird in the hand is better than six in the bush. I said, what is it that you don't like about our advance? And she hesitated. I said, I'll tell you what I typically find out at the end of the day, at some point in this conversation. Are you ready? And she's like, go for it. I said, it's the fact that it happened so quickly. And that has stunned you. You're actually in shock. And she started laughing. She goes, that is exactly how I feel. And she mentioned the word scam. And I said, it really is, unfortunately, something that appears as though it's, in my terms I used, wizardly. Like, a witch or someone with a magic wand just, or bewitched just winked her, moved her nose around and voila, there's the money. In a world where we're accustomed to this rite of passage that we've got to go through where we're beaten up, you're nodding your head, you know what I'm talking about, right? 30 days, 60 days, and finally you come walking in with your wife or your partner or your husband and into a building or online, and you're like, oh God, thank you. Finally, we got the loan, or we got the advance, and they're, you get to the point where it's like, and you want what? I thought we gave you that. And now, and again and again, just imagine being that loan officer or that independent sales organization, that rep. I mean, it's brutal, and it's funny. It's something that is very common in this industry, Darius, is we'll get new salespeople in here and they'll be like, oh man, I could go find them a line of credit anywhere. Like, whoa, hold on, Skippy. There's no such thing as a line of credit anymore. Oh, you don't know what you're talking about. Like, I do know what I'm talking about. Understand, the bottom line in this, they're going to have to put up their boat, their train, their plane, their automobile as credit with the bank. Their house, their building, they're going to have to securitize, some money they have in a CD and put it in a CD, investment funds. The bank will lock them up. Even if it's outside funds with a different investment firm other than the bank, they can lock up funds. They can put those funds in their name for a short period or put a rider on there of some sort, underwrite it accordingly. And, banks do not lend credit lines. They don't. So, not without, being in a situation where they're taking on collateral, and our loans don't have collateral. They're unsecured. I lost you there. Can you hear me at least? Let's see if we can get him back up and going here. For some reason we lost one another. Sorry for the silence. Let's see what he's got here. We still can't see him. No microphone. I don't know if his computer's gone dead or what's going on, but hang in there, everyone. One thing I do know about Darius is, just like you and I, he's behind the scenes right now working his butt off to get back on to the recording. So bear with us. Not forgot to mention also his technical skills. He's technologically advanced by far more than I am. So, If there's anyone that can get back on, it's him. So let's see what we get here. He's got himself muted. Can you hear me, Darius? Can you hear me? Hello. We might have lost internet connection. I don't know. Let's give it a second here. Well, I don't want to ruin, we've been at this now for a while. I don't want to ruin this. So how about I finish it and get out of this podcast by answering maybe a couple more questions real quick. So what do we look for in a file? What do we love the most? What we love most in a file is a company that is consistent in their monthly deposits, their gross monthly revenue. Like in your personal bank account, if you had $5,000 a month in your bank account come in, there he is, he's back. Let me answer this one question. Can you can hear me okay?
Yep.
So I was telling them that if you had, as an example, $5,000 a month in your bank account every single month, there's a high likelihood, if you were a business owner, there's a high likelihood you get an offer out of us for $10,000. We love a very consistent company that just, like your friendly neighborhood McDonald's. Believe me, they basically hit the same amount every single solitary month in sales. As does Burger King, as does something like a Big Five or Walmart. Unless, of course, you've got a holiday that's in there like Christmas or Thanksgiving or something like Black Friday, something like that. But anyway, all right, Darius, you want to continue on?
Yes. And the odd thing that happened is it just dropped out and the audio kept going. I could hear everything you were saying, but it froze
That
on
sucks.
uploading the video because this is uploading it to the studio real time, and the upload stream froze or something.
Huh.
Yeah.
Yeah, it's interesting. I shopped around for 5.5 months, and I chose Riverside for the podcast provider or host.
Mm-hmm.
And a lot of people out there are like, "Oh, you don't know what you're doing." It's like, "Oh, come on, man." I probably have at least 500 to 750 hours in looking into podcast hosts. And one of the biggest issues you've got is, do you have an all-inclusive provider where you can actually have them, get it out to YouTube and Facebook and Spotify and Apple and all that. And Riverside's one of the rare ones that has that available by the push of a button, but you have to do it yourself. They lead you to believe that they're going to do it for you, but you got to do it yourself. So there's a lot of work that you do behind the scenes. It's been quite an education, so I understand it. And we're at the nowadays we're at the beck and call of the internet, and I could tell you, you and I know these phones and our internet nowadays suck compared to 5 years ago, 10 years ago. I never had internet drop. My phone calls never dropped. But now it seems like here we are, so technologically advanced,
Right.
yet we're falling apart constantly, But anyway,
Trees dropping out. Oh yeah. No,
that's true, man. I love your smile, dude.
right.
I do.
Thank you,
I wish to God I had that smile. All right. You got more for us?
Back on track, yes, sir.
Okay, good deal.
So, can a business with poor credit qualify for a merchant cash advance?
This is an interesting question. Credit related. We on our flyer one day I took it upon myself to put the number 500 FICO score. Because what was happening which is a really low FICO score, credit score, folks, those of you that don't know it. Let's say 800, a little bit above 800 is the high as you can go. And then you can go below 500. But Darius, what people were doing was they were out there because, if there's an old saying, if you give a mouse a cookie, they're going to want some milk. Well, people were out going after the bottom feeders, the lowest credit. So they were going out after people that had been foreclosed on and trying to, almost perform CPR on it. It was like, okay, stop. Why don't we at least raise it a little bit? But yeah, we'll go down into the 400s on the credit score. But the thing is, a lot of people don't realize this. When you go to Toyota or you go to Ford or you go to Chevy or you go to, Wells Fargo to buy a car or a truck or a house with Wells Fargo, KeyBank, US Bank, this type of thing, the very first thing they do once they get your application is pull a credit report. That is the last thing we do. In fact, we don't want to pull it. We pull credit less than 2% of the time. The only time we're pulling a credit report is if, they don't have very much time in business. Their sales are very inconsistent. They should have a website, but they don't. I mean, you and I know what kind of businesses need a website. I mean, if you and I owned, a skateboard shop and we're selling shirts and hats and, skateboards and trucks and wheels and tires and the boards themselves or the total unit, there better be a website, right, brother?
Right.
But, you'd be surprised at how many of these businesses don't have a website. And it's like, come on, this is not a legitimate business. And so for us, it doesn't matter if that business is working out of their home. It doesn't matter if it's got a physical storefront location. And the credit doesn't matter to us. So it's not the normal world from that standpoint. I mean, one thing's for certain. You hand in a company that's doing at least $10,000 to $15,000 a month in gross revenue, and they've been in business 20, 30, 40 years, they're getting an offer. You with me? We ain't worried about credit. Because you know why? She or he or they or whatever pronoun you want to use knows how to stay in business. You with me? Especially if it's the same owner. Like we had a guy the other day that we did a loan for in Helena, Montana, that owned a motel for the last 41 years. And interestingly enough, is married to a 20-year younger old woman who's a 50-50 shareholder. Because as you know, you need 67% of ownership on the application. Right. So we could tell that she owned 50%, he owned 50%, which made us feel good because we said to ourselves, okay, he's old like me, I'm old, a lot older than you. If you and I were partners in business, that business needs to be able to carry on to pay the loan. So there better be some documentation that says, Darius, or in this case her, she gets to continue on when he's gone. Well, naturally, the way the courts would handle it is that motel would be able to go on.
Right.
So, anyway, yeah, no. Credit's not a non-issue. Will we kill a loan for credit? Yeah, we will. But that's when everything else sucks. Now, here's the terrible thing is, now the salesperson comes back and they're like, well, come on, look how good. It's like, hold on. You don't know what's going on behind the scenes. There's 2 armed robbery charges, 5 DUIs, and these are character-driven loans,
Right.
And on top of it, the clown's a pedophile. Sorry, Charlie, but this person isn't getting any money from us,
Right.
Right. I mean, they could have an 800 credit score at that point. Once we hear the word pedophile or rape, molestation, armed robbery, financial crime, they ain't getting an advance or a loan in this industry. It's not going to happen.
Which actually goes into the next question, and as a follow-up to this question, while we're here, do you do any inquiries like a soft pull?
Yeah, and interestingly enough, a lot of people don't understand what that means. So, a hard pull, as an example, if you went to buy a car today or a house today, a bank that did a bank loan or a home loan for you would pull three separate credit reports for all intents and purposes from three separate bureaus. They call them bureaus. A three bureau credit report or three bureaus of on the credit report where we would do what Darius is talking about, and that's a soft pull where we just pull one. And it's typically Experian that would be pulled, if anything, because its score is typically higher than the other two on average. And so we're shooting to give them the last, chance at it. Because one thing's for certain, if they've done a tremendous job of paying their credit when everything else looks like crap, they're getting an offer out of us. They're getting an offer out of us. It may not be 2 times their gross monthly revenue. It might only be half or 1 time their gross monthly revenue, but they're getting an offer.
Okay. What happens if a business defaults on a merchant cash advance?
It's funny you say the word default, and a lot of people don't know what the word default means, but the bottom line is the business owner walks away for whatever reason and doesn't pay us back. We have no recourse. We have no ability to go take their home from them or steal their Rolex watch in return that they own, or anything for that matter. There's no recourse.
Okay. And is refinancing a merchant cash advance possible?
Yeah, in fact, quite frankly, it's not done enough. Instead, what people do is they take that lazy option the funding company does, and they put a second advance or a second loan on top of the first one, which creates trouble for the business owner because now they have 2 payments rather than 1. So it's really rare that people refinance because the salesperson is not out promoting it. And I really truly believe, Darius, that the business owner is uneducated enough. I mean, you've only had a little over 5.7 million of these business owners in the country take one of these loans or these advances, and out of about 107 million businesses in America. So most business owners don't know about these advances or loans. And the interesting thing is people who come onto our platform or into the industry, once they've been at it for a day or two, a week or two, a month or two, they say to themselves, everybody knows about this. It's like, hold on a minute. Go back and remember, you didn't know about this. So what makes you think they would know about this? So you got to, there's times where you got to go back to that mindset of what was it like when I first stepped in here. And make no mistake about it, refinancing someone's current merchant cash advance is a unimaginably great way of getting market share, and not very many people do. I don't even teach it. I don't teach it because no one does it. No one does it. Yeah, it's bizarre to me, but
you're missing out. It's just another tool
make no mistake
in the
about
box.
it.
Right?
Yeah. Yeah.
can we give a business owner an idea of what they would qualify for without documentation?
Ah, you gotta love the hypothetical situation or the factual situation.
Right.
My business owner has an 807 credit score. They do $400,000 a month and they pay all their bills on time. So, what can you do for us? Or what can you do for them? Because they're not going to give me anything until you tell us what you can do. It's like, oh, hold on a minute there. Tell your business owner to go into the emergency room and say to the ER doctor, see my broken arm? I'm not going to let you fix it until you tell me whether it's broken or not. Or see my hurt, injured arm or leg or neck. I'm not going to let you do anything until you tell me what's wrong with me. Come on. You got to do an x-ray. And that's what we do. We perform an x-ray. And we do it by looking at their 6-month bank statements and the application. Folks, good Lord. When I was in the mortgage industry in my prime, right up at the end in 2006, like I was talking about towards the beginning of this podcast, when we first started, you'd be working on a file for 60 to 90 days, and I owned the company before you could get an approval, and that's very common in this industry for those people that don't know what they're doing. But for those that do, I can tell you, folks, they're funding loans in 2 or 3 hours because they just say to the business owner, no, we can't give you a hypothetical term rate to the loan. We cannot.
True.
And they're unwilling to do that for some reason. And if you would just do that, at the end of the day, it would go so much better for you. If you would just say to them, no, we can't do that. We have to have 6-month bank statements and the application filled out and signed and dated. And then in that case, they get you what you want. Or they say no, which is great because now you know where you stand right then and there, rather than working on it, for 2 or 3 weeks or 2 or 3 days before they finally say no to you or before you finally say no to them. So we lost Darius again. Gotta be related to the internet. I can see it plain as day. So let's give him a second. He was able to get it back up and running. Something that we haven't gone over, I wanted to bring up earlier. When the business owner defaults, something came up in my brain. We do not take your commission back. We do not, what the industry calls, claw back your commission. We don't claw back your commission. So there he is. Welcome back, sir.
Thanks, sir.
I don't know if you heard me there, but I was talking about the claw backing of the commission or the taking back of someone's commission. I mean, you go over to On Deck, you go over to Capitus, and you fund a loan there. Let's say a $300,000 loan, and you're making, $21,000 to $35,000 on that loan or that advance, and that business owner defaults on that loan on the 3rd day or the 27th day. It doesn't matter. They're getting their money back. Now you'll say to yourself, oh, well, I'm just not going to do business with the company anymore, Capitus or On Deck or any of these other companies. I'll just go get approved with someone else. Yeah, good luck with that. Because the industry protects itself from people like you, but more importantly, they're going to sue you. And I mean, they're going to sue you from every single solitary angle. And the lawsuit has teeth because we're the only company in the industry that does not make you sign an ISO agreement. Think about that for a moment. We are the only company in the industry that does not make you sign an ISO agreement. So you go ahead and give them a call. Try and get signed up with them. You're going to have at least a 7 to 10 to 15 to 20 page document you're going to have to read through, and you're going to have to be a Philadelphia lawyer to understand what the hell it says. And at the end of the day, look in there and you're going to read their clawback or their commission take back clause, and they're going to come get your money. Make no mistake about it.
Which even ties into how they will sneak in the personal guarantee line. Well,
Yeah, we don't have a personal guarantee on our advances. It's quite frankly, that's another reason, probably one of four reasons why a business owner won't take a loan from a bank when they get offered one, is they don't want to sign a personal guarantee.
right.
Even though they got a good offer, they don't want to sign a personal guarantee. And then, honestly, dude, think about it for a moment. You know, imagine if I came to you and said, "Hey, Derek, you and your wife," and said, "Hey," sat down, we had dinner and everything, and I said, "Yeah, hey guys, I'd like to borrow 30 grand from you," and you're like, "Well, there's going to be some parameters here, Brett. If we do lend you this money," you're like, "No, I don't want any perimeters." You're like, "Well, for Christ's sake, there's got to be some perimeters here." No, it doesn't work that way with me. It's like, well, you're not getting money from us, right? I mean, come on, it's 30 grand, a little bit different than $30, right? But yeah, anyway, I can remember a time when you borrowed $30 from me, or I borrowed $30 from you. Back in the day when we were in our teens or 20s, where it was like, look, there's some parameters here. I'll be stopping by with a baseball bat. you know, I need this money like the body needs blood. So yeah,
A
no,
couple of my
there's no
friends come by and
clawback.
pay you a visit in the middle of the night.
What's that?
You'll have a couple
Yeah,
of
yeah.
friends come by and visit you in the middle of the night.
And you're not gonna be able to see their face. They're gonna have a hood on, for sure, or a hat.
uh,
Yeah, that's good
uh,
stuff.
too funny.
Yeah.
So you briefly touched on what an ISO is. So can you explain to the audience
Yeah,
what
so
ISO is?
it goes back to the credit card processing industry a lot of years ago. And those people in the credit card processing industry that represent credit card processing companies are called ISO partners, independent sales organization. Now, because we're an industry that allows people to come in to our organization without any past skill sets in this industry, most people have no idea what an ISO is, and they haven't thought of the advantages of incorporating or forming an LLC, incorporating like an S corp or a C corporation, or forming an LLC, or even a sole proprietorship. So my recommendation to most people is seek out, advice from a CPA, but at some point, once you start making good money at this, you should be in a situation where we're paying your company, your organization. So you're an ISO, an independent sales organization. That's how we think of you if you're selling this product, this money.
And how do ISOs get paid?
How do they get paid?
Yes.
So they get paid via a wire transfer or a direct deposit. For years, we used Western Union, we used PayPal, we used Walmart, we used Green Dot. I mean, you name it. Back in the day, me or one of my staff members could walk into a bank or walk into Walmart or walk into Western Union with 30 grand and send it to you. You ain't sending 30 grand to someone at Western Union anymore. I'm sorry, Charlie, but it's just not going to happen, you know. And you're not going to send it from Walmart. You're not going to send it from, your local Rite Aid in a green dot environment. So, yeah. Now, if somebody doesn't have a bank account, which, by the way, is over 30% of the people that enter this industry with our organization, then we pay their mom, their dad, their aunt, their uncle, any friends or any family members. So it's not a problem at all. So don't get worried about that, those of you that heard this and say, oh my God, I don't have a bank account. Don't worry about it whatsoever.
Okay. And how do ISOs get paid on renewals?
So I think that it's fair to say that what I love most about the people that are new in this industry is they're not churning their business owner all the time. Like as an example, let's say you had 50 business owners that you had done advances for over time. New people don't have it on their mind, 8 weeks, 6 weeks, 7 weeks, 5 weeks after they've done an advance for that customer to call the customer back up and say, hey, do you want more money? But believe me, the old people in the industry, once they get to that 5th, 6th, 7th, 8th week, they're hitting them with emails. They're hitting them with letters. They're hitting them with phone calls. They're hitting them with texts. And it's obtrusive, man. I mean, you're a business owner. Let's say that you have 5 employees. You're one of 5 employees. So you're every bit as busy answering the phone. Maybe you're right up there with your secretary. I've been there in those early days in business with my businesses where, the other 3 employees are busy and it's me and the secretary answering the phone or receptionist or gatekeeper, whatever. And you're just constantly getting pounded on by these salespeople. Do you need another advance? Do you need another advance? I can tell that you've got an advance already. Do you need another one? And I don't think that the new people in the industry do that enough. I don't. But typically, once that business owner has paid back about 33 to 35% of the money that they owe us, you need to be contacting them. And then all you have to do is just get new bank statements for those most recent months. So if it's been 2 months, if it's been 3 months, then you just get 2 months worth of bank statements or 3 months worth of bank statements. You don't have to get the application again. I mean, Darius, how much more simple can it be than that for not only the ISO, but the business owner, right?
And you actually answered 2 more additional questions. Is how soon can they get more money, and do they need an application for renewal? And you just covered that. So
great questions, by the way. Nobody asks those questions. Do you need another application for the renewal? Because the thing is, folks, listen, yes, you want to keep in contact with these people, but at the same time, you want to create a path of least resistance. That old saying, shortest distance between 2 points is a straight line. There's nothing on the face of the planet easier than just reaching out to someone like Darius and saying, hey, Darius, it's Brett. 2.5 months ago, you did an advance with us and got $108,000. You're due for another one if you'd like. We can give you an additional advance. All we need is your most recent 2-month bank statement. Or you put in there, the only thing we need out of you is 2 months, your most recent or your last 2 months bank statement, something like that, and you use the word like only, the only thing we need out of you. It just makes it sound like we don't, as opposed to like my ex-wife, she worked at Wells Fargo and Key Bank, and she'd leave a note like, hi Darius, this is Julie with Key Bank. We'd love to see if we could do a refinance with you. If you get this message, make sure you have a pen and paper in hand, because I've got a list of stuff I have to have you write down. Or, hey, Darius, give me a call. I'd like to go over this list of stuff. It looks like we might be able to give you, refinance your loan right now, So, yeah, I mean, God, dude, there's nothing on the face of the planet like, them refinancing or getting additional money, 51 days after they got money from you the first time around, right? And then
True.
again and again, because 98.67% of the time, 98.67% of the time, they're going to take 4.1 more of these loans. Now, and I know that a lot of people get offended when I say this, but folks, just think of a heroin addict on the side of the road and understand they're looking for a fix all the time. And once you get that type of a business owner, look, I have to tell each of you something. I am a heroin addict when it comes to this money. All day, every day, 5 days a week, I've got 3 money buyers out there in the United States and in foreign countries looking for money for my organization. Because we're a growth company.
Right.
We didn't just quit at 125 ISOs or 3,500 or 4,000 ISOs like On Deck or Credibly. We've got over 212,000 people that have gone through my class. So we need money like the body needs blood. And there are business owners like that are entrepreneurial. One Subway restaurant is not enough. And I'll tell you the main reason why. When I got in this industry in 2007, if you owned a Subway restaurant, that was enough. You were making enough each year off that one restaurant. If you owned a McDonald's, one McDonald's, you were making enough money in 2007, you didn't need to own another McDonald's. But now you need to own 2 McDonald's, maybe 3, to make the type of money you were making in 2007. You need to own 5 Subway restaurants to make the money nowadays that you used to make in 2007 when I got in this industry. So a lot of these business owners are using this money to buy a business. And it's typically another business that's identical in nature to the business they already own. A pizza shop, a pizza parlor, a bowling alley, a pool hall, another landscaping company, another roofing company, and that's something I think that we miss all the time, Darius, is there's not enough people that are saying to people, you can use this money to go buy a business. If you're entrepreneurial and you want to expand your business, you can use this money to go buy a business,
And if that business does extremely well and they hit a nice spike of cash, is there a prepayment penalty?
No, in fact, there's actually a prepayment discount to the cost of the money. So the faster they pay the loan back or the advance back, the less the cost of money. Some of you say, the less the interest rate. That's not what it is. It's not annual percentage rate. It's the cost of money. So now let's say if it's a fixed cost of 30% and they owe us, $30,000 on top of the $100,000 they borrowed from us, and they pay it back quickly, they may not owe us $30,000. They may only owe us $15,000. So what you'll see with most of these business owners, believe it or not, at Christmas time and other certain times of the years, depending on what type of business it is, like during those months that landscapers are in business, their cash flow is really high. That's when they'll pay these loans back. Same with merchants that own, businesses that do well at Christmas time, like a jewelry store. What do we got coming up here next week? We've got Valentine's Day. Going to be one hell of a lot of necklaces and bracelets and earrings and rings purchased,
Right.
and so that's when that business owner, jewelry store, typically end up paying us back. And so, when I was in this industry full time, I knew my 183 jewelry stores that I'd done loans for, advances for throughout the country, and right about December, I'd start talking to you. Hey, Darius, guess what? Brett, how the hell's it going? It's going great. What's up? Hey, listen, you got Valentine's Day coming up. You're going to need inventory. Do you need an additional working capital in addition to what we've already given you? Or do you need another advance because you paid that one off? That type of thing. But yeah, so no prepayment penalty. There's a prepayment discount. And not enough people talk about it, quite frankly.
Nice.
Yeah.
And can these ISOs work from anywhere in the United States?
Yeah, in fact, we've got people down in Puerto Rico that work in the U.S. We've got people in northern Mexico that work in the U.S. We've got people from Canada that work in the U.S. So the people from the U.S. cannot work in Canada.
Correct. And that,
When I say work in Canada, I don't mean move up there. I mean work remotely from here, from their home, from their car, from their house, from their apartment, townhome, whatever.
thank you. And that leads to the follow-up question: is do we fund international?
Say that again.
Do we fund internationally,
So
like overseas?
northern Mexico, Canada, Australia, Japan, and the UK. But you have to live there. Other than northern Mexico, you can live in the US. You have to live there. To do a loan in an advance in the UK, you've got to live there. That Australia, the same thing.
Thank you. That question actually just came up this morning. I had a gentleman call
Right
me,
on.
and he wanted to fund a business in the Philippines, and I said, "I'll get you an answer on that." So, thank
God, I
you.
wish,
Fine.
brother, with the disasters they've had so many disasters. That would be great, but no, unfortunately not.
Okay.
Yeah.
Now, where do we see this business going with how fast AI is growing?
Well, I have to tell you something. When I compare our model, our company, to other companies out there, it's as though we've been part of AI all along since 2007, quite frankly. I mean, we've grown like this. We never went like this or this. We just grown like this since 2007. And it has a lot to do with the fact that I I want I like a lot of challenge, and a lot of business owners don't like a lot of challenge. I think that people would be surprised at how stressed out business owners get with challenge and growth. They would just rather buy a business that spins off $10,000 a month, and I don't know what universe they live in, quite frankly. I was, after you've done enough loans in this industry or advances in this industry, you start to realize there's no such thing as this type of a business. That's why you can, see the statistics for companies like Nike and General Electric and IBM and Tesla, where, Nvidia, where, they're down, their revenue's down, $350 million this quarter, this type of thing. I
Sure.
mean, if those companies can't run like this, come on, you know. What type of businesses run like that? Adult care facilities, daycare facilities, hotels in a major thoroughfare like where I'm at. We've got a freeway here not far from my field of vision called I-5, and they can't build enough hotels in this city, bro, because you go from Portland to here, it's about 300 miles, or Seattle to here, it's about 550 to 600 miles, and you're tired. And
Right.
so they stop here because they ain't going on to Redding. They ain't going on to Sacramento. They're not going on to San Francisco. They're sleeping here. So these hotels are constantly full. And I think you look around the country for the most part, it's pretty much the way it is in the hospitality industry. So I kind of went off a little bit from your question. Maybe you want to ask that question again for them.
Yeah. So where do we see this business going with how AI is growing so?
I think, in the mortgage industry, we went to an AI type environment in 2004, 5, and 6, and so did the rest of the mortgage industry. And what came out was what they call LP underwriting, where it was pretty much automated. Okay.
Yes.
But I could tell you that I think that the fintech industry is as automated as it's going to get, quite frankly. I think there'd be those out there that would just hear this right now and just give anything to debate me on this. But at the end of the day, brother, you've got to put your personal touch in this in regards to underwriting. The sniff test. It's kind of like, it reminds me of that moment every time Russell Crowe in that show that he was in, Gladiators, where he would reach down and grab some of the
Yep, the
dirt,
sand.
or maybe,
Yep.
yeah,
Love that movie.
or he would even remember he would even collect a rock and put it in a little bag, of the places he'd been, and that's not uncommon in wartime history, where men and women of the military have done this. But for us, I don't see it becoming any more automated. I mean, come on, dude. How much faster can we go? It's the business owner that's the problem, and that is because here's the thing you got to understand. The ISO has a problem with this too, because the moment that I don't have let me give you symbolically something here, okay? The moment you get an approval as an ISO in one day, you feel crowned. Like, oh God, if Brett's company, if mom and pop can do this, I can get this anywhere. Well, it's not the case, but the ISO does it anywhere. Anyway, well, God, dude, think about it for a moment. Now they go shop around for a week and they can't find it anywhere. And they've had that business owner for a week. Guess what the business owner's been doing during that time? They're looking also. Because the moment the business owner finds out that they can get one of these advances or loans, if you're not in their ear, they're moving around. They're moving around, and someone else is going to do it. I get such a kick out of people that say to me, that a business owner's not interested. It's like, are you kidding me? They filled out an application. You're kidding yourself. No one goes to the doctor because nothing's wrong. No one wakes up in the morning and says to themselves, I'm going to the airport with no destination in mind. No one gets in their car and takes off, for all intents and purposes with no destination in mind. So don't tell me they're not interested, What I always get a kick out of is how we see that loan application out of a different ISO that same day or 2 or 3 days later. And it's like, and we try to reach out to that first person who uncovered it, and it's like, we do. And we let them know, by the way, you're in a situation right now. And they're like, well, the business owner told me they're not interested. Like, hello, their actions speak louder than words. They're looking again. No, they're looking still. I mean, they don't quit. You got to go back, brother. Listen, you can go back to the lady who founded this industry, and we all stand on her shoulders. Her name is Barbara Johnson. It was 1997, and she had a need as a business owner for money. And she wasn't able to get it at the bank. She wasn't able to get it at the credit union. Right. She didn't quit. In fact, what she did was she invented this industry. I mean, that's what business owners are capable of.
True.
And so, don't tell me they're not interested. I mean, they're so interested that they'll try and invent a way to get this money. And do the standard options: mom, dad, aunts, uncles, brothers, sisters, credit cards. I mean, borrowing against your title of your car, your boat, your house, going to a pawn shop. I've done it all. I've done it all. Mm-hmm. Because I've been in situations where it was like, we're $4,000 shy. I don't have the money. Julie didn't have the money. But I had an $8,000 whatever. And it's like, I'm going to the pawn shop. It's as simple as that. It's 10 minutes down there, 10, 15 minutes while I'm there, and 10 minutes back to our business. Here's the money. Here's the cash. We're moving forward. We ain't going to stop. So don't tell me the business owner's not interested. That's what business owners do. And in most cases, in most cases. Sorry for rambling.
No, you're good. It's just bootstrap.
Yeah. Yeah.
So for the ISOs just getting started, what are a few effective marketing techniques, and where should they be placing these?
It's comical to me. Oftentimes I take an entire week and teach people primarily where to go, what to say, how to market these people, even the time of day. And then all of a sudden out of the blue, the national sales managers, get some. I'm not gonna be, condescending and say, some idiotic question, but they get these questions like, what do you think about using carrier pigeons? And you're like, what? For God's sakes, I mean, you can't believe. I don't know what to say. I mean, I can get on Craigslist today on Saturday or on Sunday and get answers, and it's 2:56 p.m. West Coast time. I can get answers out of business owners right now. I think that the number one reason why people don't use the black envelope or don't use Craigslist or don't go door to door or don't telemarket primarily has to do with the fact that they're just not disciplined enough to do it. That's it. They're just not disciplined enough to do it, But we live in a time that's really interesting, and that is when we lack the discipline to achieve what it is we set out to achieve. Then what we do is we blame other people for our lack of achievements. And for me, I almost want to say F you. And give them the middle finger, I mean, I couldn't imagine, just think about this for a moment, and I don't pretend for one moment to be God, but let's pretend for a moment. What if you and I were having a cold beer and we were the creator? And there were two of us, right? And you and I happened to be sitting on a, half moon night, and we're looking down at it all, and it's like, look at this guy, or look at this lady. Good God. They have all these abilities, all these skill sets. They've read all these books. They've listened to all these, YouTube videos. Nobody's more motivated. Nobody's more inspired. Nobody's more educated. What is with this guy? Or what is with this lady? But I don't know, what it is, quite frankly. I do know that landscapers mow lawns and cut down trees and prune trees. They don't paint houses. They don't sell tires. And seems to be a hell of a lot of landscapers out there that are really busy.
Oh yeah.
Oh yeah. I mean, they're everywhere. You see them with their truck and their trailer, and you see it full of grass, and they've got their weed eater, and they've got their hoe, and they've got their shovel, and they've got their lawn mowers, and oftentimes different size lawn mowers. And you look at this industry and you say to yourself, it's like, come on, man, where's your tool kit?
Right.
You gotta have a tool kit, You can't be a roofer without a tool kit. You can't be an electrician without a tool kit. So, I always get a kick when I go out with ISOs and they're like, what do you mean you want me to bring a pen and paper? I'm like, you're not putting their information into the phone. You're going to write it down. Because if I'm sitting there taking notes of what Darius is saying, and he owns a landscaping company or a jewelry store or a hotel, you're more apt, I'm like a reporter, you're more apt to talk to me like I'm interviewing you. You with me? And so these are tools of the trade. I'm always amazed. I sit down with ISOs throughout the country and I look at them and I'm like, okay, we're getting ready to telemarket now. Where's your pen and paper? They're like, well, I'm not going to use pen. It's like, what are you going to use? Well, I'll just use my phone. I'm like, we're going to be on the phone. We're going to be on the phone, But, people are talented enough to move the screen across and go over to their notes and work out of there in addition while they're on. But what if they hang up on accident? We've all done that. I mean, I can't begin to tell you how many times I put in my code and then I scroll down and I'm going to copy something off of Google and paste it elsewhere. And as I scroll up to hit the word copy, I end up hitting email or something like that, And so, I mean, anyway, yeah, as far as markets go, I've gone over the markets again and again and again. If someone hasn't taken the class, I can't imagine they're listening to this podcast. But if they are and they're thinking about getting in the industry, they're not going to know what the black envelope is.
Right.
In fact, maybe I should do that. Give me 1 second. Stay there.
Yeah.
So I keep these with me. These are old. So here's our company flyer. And it goes inside a black envelope and they can send it in the mail or they can bring it to the business owner in person. In my case, you can see I wrote on there, attention owner. And then you open it up or they open it up and there's a flyer in there. And this one happens to be for small businesses. You can see right here for small businesses. Okay. And I mean, a black envelope versus a white envelope. But it's funny. What's funny, honestly, Darius, I swear to God, you got guys your age, guys my age, women your age, women my age, younger, older than you and I, and they give us this excuse of, well, I don't have the money. But then these people have to think back on how many times have you borrowed money in your life for something? I mean, come on, dude, think about it at your age and my age. How many times we borrowed? I don't care whether it's $5 or $50,000. You and I borrowed money by the time we get our age, right?
You lose track.
And what's so funny is you're out there, you come across an opportunity like this, you say to yourself, this is the greatest thing since sliced bread. I want to be part of this industry. Oh my God, I have no money. It's like, hello, call your mom, call your dad. Well, I borrowed money from them. Tell them I ain't going to be borrowing anymore. In fact, I'm going to be paying back. I found it. Hello, I found the mother lode. But I don't know. I mean, personally, I borrow money for my businesses over the years because I have the faith. It's what Warren Buffett says, that you're better off investing in yourself.
Right.
Okay. Well, I could tell you what they're really saying to me and what they're really saying to you, Darius, and the rest of our management team is, I'm not going to pay for black envelopes by borrowing money from someone. Not because these don't work, Brett, but because at the end of the day, I know I don't work. I'm a failure. I'm a failure. It's kind of like that George Costanza line from Seinfeld, when he says to Jerry and the team, I come from a long line of quitters. I mean, what makes you think for one moment that you're going to miraculously come into some change without, being in a situation where you start to dedicate yourself, become deliberate, and what's the other D word I'm looking for that I used earlier?
Dedicated.
Dedicated. Yeah, that's the wrong word, but it's a great word. I mean, anyway, I can't think of it. I apologize. I hate it. Getting old.
That's right.
Must have ate too much sugar, right? And my brain is not functioning all that well right now. Yeah. Yeah.
All right. So as we close this out, we have one question, one of the final questions, and it's regarding underwriting. So what are the stages of underwriting, and what should the ISO look forward to in terms of a timeline for a approval or denial?
Someone hands in 6-month bank statements, each separate in PDF format, which is the way that the business owner sends them to them, and the application filled out and signed and dated. They're going to get an answer that day, if not the following morning.
Okay.
If someone hands in a zip drive, we won't accept it. Okay? If someone hands us in 2 or 3 months bank statements, we're not going to accept it. The industry doesn't accept it. If someone hands in personal bank statements, we don't accept it. If they've only been in business 3 months and we need 6-month bank statements, we don't accept it. If the application's not signed and dated, we don't accept it. Okay? So, I'd venture to say that you have dude, there are people that don't like to drive the speed limit. There are people who don't like systems. You with me? They don't like systems. They don't like the man. They don't like getting people in charge of them. So when you lay down the law like this is what we need out of you, no matter what, they're going to be contentious or argumentative. And so they're going to try and put a square peg in a round hole, and when you don't accept it, F you, right? What the hell's your problem? Your company sucks. And it's like, how hard is it, for God's sakes, to get 6 months worth of bank statements and the application from the business owner? I mean, so one of the problems you've got is a lot of people will get the bank statements from the business owner and the application, and for whatever reason they feel they need to download those into their computer and then upload them back into email form, not realizing they just take that information they got from the business owner and press forward and forward the email, and probably from my perspective, the most important aspect of this, which I've left out intentionally until now, is, last but not least, put the name of the business in the subject line. Like, we have a company down in Arizona, and she took a loan from us last week. It's her 41st loan since I first talked to her in 2007. And what happened was, I was down there. It's a confectionery shop. And I went in and I had one of these really amazing marshmallows. And she custom made it. Her mom did. And it was just simply amazing. The thing was, like, talk about heroin. If I could, put it in liquid form and put it in my veins, I would all day. But she just did her 41st loan or advance with us. And I send those loans out to individuals within the company. And, this guy reaches out to me and he's like, well, she sent it in a zip drive. I'm like, no, she didn't. No, she didn't. I know her personally. I'm the one who did her first advance. I'm the one who did her second, third, fourth, fifth, sixth, seventh, eighth, and ninth advance. She knows what to send. She did not send you this information in a zip drive. You put it in a zip drive. And then he just went silent. I said, see, the fact that you hesitated tells me that I know what I'm talking about. He's like, how do you know that? I'm like, I just told you that she has a habit and it's in place. And I said, every other ISO has handed it in just the way she handed it in. But what you did was you downloaded it. And I said, and my suspicion is because you don't have enough memory, or your server wouldn't send it because you lack the memory in your, hotspot or your internet from where you're at. And he's like, that is exactly why I did it that way. I tried to send them off, and at the end of the day, there's too much megabytes. And it's like, dude, you're just going to have to get this, you could forward it from your phone. It will handle it. The computer may not, but your phone will. Get off site, go down to Starbucks, and forward it from there. So, it's just one of those things that he hadn't given any thought to. But, it's our underwriters, honestly, Darius, I think they take probably 50% to 75% more abuse than the rest of the underwriters in the industry. And that's because they're dealing with a lot of new people, And they're compensated for that. In fact, they're overcompensated for that. But at the same time, let's be honest with one another, brother. When you take that if you and I were both, UFC fighters, you can only take so many blows to the head before that concussion causes you, to say, I got to get out of the job, And
Tap out.
I mean, brother, there's times I go into that underwriting room or location, building, and honest to God, I mean, I just yell at everyone. It's a joke that I have. Stop! everybody hide the sharp items. You know, I don't want anyone slitting their wrists. And people start laughing like you're laughing, but it's serious. It's serious. It's like, all right, look, deal. Here's the deal. Everyone up, smoke them if you got them. Let's go outside. If you're not a smoker, let's go do some drinking. If you're not a drinker, let's go watch people smoke and drink. But we're going to get out of here for a while. Let's go. You know, and because it's a dogmatic hell that doesn't stop all day long. I mean, they're looking at thousands of files a day, and you know that's a tough scenario. So the best, and you want them on your team.
Of course.
You want them to like you. You know, you don't want to get off the wrong foot with these people. And believe me, I don't care what anybody says, you know. You burn your bridges here, then there's a high likelihood you're going to burn your bridges elsewhere. You got a propensity to burn bridges, you know, and you ain't going to last very long, because one thing about this industry is we protect each other. And we'll tell each other about those people that are toxic or caustic. We will, Darius. And that person, they ain't working in the rest of the industry. They're just not. You know. So, I mean, used to be a time, bro, when we had to prove, or one of our competitors would have to prove to us why they suggest that we not work with you if you're that person. But now we take their word for it because we've got that level of trust with the primary funding companies over the years. You know, we're not playing around. This is a group of professionals. That's the thing I can tell you, that when you talk about AI, that what you're going to see, I think, is you're going to see companies come in here like Square and PayPal and
Stripe.
Who?
Stripe.
Yeah, Stripe, Square, and PayPal. I mean, it came out of nowhere 4, 5, 6 years ago. PayPal a little bit longer, when Elon and his partner started it. But anyway, they came out of nowhere. And they were doing credit card processing, but it wasn't 2 or 3 years later. They were in the merchant cash advance arena. Now they share the top 10 position, you know. And that's because someone that's done their credit card processing is on the phone with them. Hey, Darius. It's always about the ease of the paperwork. Hey, Darius, you're already in our pipeline. All we need is 6-month bank statements out of you and an application. And the customer doesn't even realize that's all any of us need. Right? But they're just making it sound like it's really easy from their perspective, you know, or with their company. You ought to see it. It's terrible with all the other companies. I mean, you could really learn something from that if you knew what I just said. I mean, that's the thing, is that's a sales feature. I've always loved. I mean, look at this flyer for a minute and understand this section right here. That's all we need from the business owner, right there. No tax returns. We don't have to call the landlord, even though, now Darius, I got to tell you, we redid the application for 2026, and the new application's going out, and it no longer has that section on there for a landlord. Because about 4.5, 5 years ago, we quit calling the landlord. So we just don't have that on there anymore. In fact, we've removed about 25% of the application. And so for those of you out there that want a new application, you might reach out to Grants Division if you're at this point where you stayed this long, and say to Grants Division, hey, could I get the new updated application? Because what's so cool about it is you thought the application had next to nothing on it in the first place. Wait till you see the application now. Honest to God. You know, so anyway, we've actually gone a hell of a long time, brother. We've gone an hour and 39 minutes for Pete's sake.
We have, even with a couple technical difficulties.
Yeah, amen. Yeah. Well, listen, everybody, I've come to know this young man pretty well on the other end of this podcast, and I got to tell you something. He's a quality son of a gun. He's handling a lot of responsibilities on behalf of the company. I can't talk highly enough about him. I know some of you have him as a team manager, as a national sales manager, and in addition, he recently has taken over the entire management of the national sales managers. Now, I had this position in place before. It's been about 2.5 years since it had someone in the position. I've been looking really hard, and I opted to choose Darius. Quite honestly, I think Darius opted to choose us. Let's put it that way. And it was mutual. I was going to say it was mutual at that point. Trust me. But anyway, everybody, listen up. What I'm going to tell you, probably Darius is not prepared for, but he wants, and that is that we're going to start having national sales management meetings once a week. And so Darius and I will be reaching out, or Darius will be reaching out and letting you know when that meeting will take place. And then we could talk about, weekly about issues, files that have funded, anything, underwriting, whatever you want to talk about that you could bring back to your teammates. But with that, I've got no more to say, Darius, other than thanks a ton for spending, an hour and 40 minutes with me on your Sunday, bro, in the middle of the day. It means everything.
Indeed. I thank you. Yeah, I mean, we had this lovely list that we wanted to get out to the teams and just really empower them with the questions that come up frequently. And when they can just say, hey, just go check out this podcast. It'll answer greater than 90% of your questions. And then if you still have questions, just come back to us and we'll fill in the little details.
Hey man, if you still had questions, you probably didn't listen to the whole podcast, baby.
Exactly.
Let's put it that way, Yeah.
It's true.
But that's the way we are, I mean, I'm as guilty as anyone else. But I will tell you this, Darius. One thing I do have more respect for than ever is that more and more we're starting to realize that when we want to be part of something, if there's someone out there that, has a lick of information that we think may help us, by God, we are willing to absorb it, most of us.
Oh, yeah.
I've really met some quality people like yourself on our team, and it's just an honor to be the owner of the company and be around people like yourself. So thanks a ton for being there for me and the company today.
Thank you, likewise.
All right, brother. I love you, big dog. Have a great afternoon. Great rest of your evening. Yeah. Take care, man.
We'll talk soon.
See you on the other side. Bye-bye.